Commodities and investments with your quarterly stocks and acreage report recap. Today, March 31st, 2022, the USDA came out with their quarterly stocks and acreage report, and we're going to go ahead and go over the numbers here and the impacts on the markets here today. And first, starting off with a disclaimer, just remember that trading futures and options is risky and substantially risky and is not suitable for all investors. So, going on into what the USDA had to say today in the quarterly grain stocks portion of the report, the USDA reported the actual wheat stocks at 1.02 billion bushels, and that was 25 million bushels less than expected. Corn came in right on par with expectations at 7.85 billion bushels on hand versus 7.877 expected, and then beans came in just lightly bearish there at 1.930 billion bushels on hand, and that was 28 million bushels more than expected by the market. But really not a whole lot of of deviations there from what was expected, and traditionally there's really not a whole lot of surprises there on the quarterly stocks side, at least in the March report. But there were a lot of surprises on the acreage side of things, with a big shock coming in the corn market. With the corn acres being reported at 89.5 million. That was 2.5 million less than expected. Soybean acres were reported basically 2.3 million acres higher than expected, and that would be about 3.3 million acres higher than last year. And the wheat market came in right around expectations at 47.4 versus 47.77 million expected. Your cotton acres were up 200,000. Your sorghum acres were cut. Basically everything that takes a significant amount of nitrogen, such as sorghum, sorghum and corn, things like that, saw their acres significantly cut. Whereas things that are cheaper to produce, such as wheat and soybeans, saw the addition of acres there. A lot of the major percentage changes were in the southeast, such as like Georgia, Alabama, Mississippi, Arkansas, stuff like that. More large losses up in North Dakota here as well, just because they have a lot of other substitute crops as well, and they've also got pretty low yielding corn up there when they do grow corn. So just a lot more difficult for them to justify growing crops up there, and kind of the same thing being said for Minnesota. On the soybean side of things here as well, North Dakota is actually a net loser there as well, but then all the other states pretty much are net gaining, besides Oklahoma there. But obviously just because of, the increase in inputs, throughout the years, throughout, this past year. And obviously, down in the southeast, you see the largest increase. They're switching out their corn acres for soybeans and cotton. So when you look at the wheat picture as well, a lot of these, eastern, southeastern type of states are picking up their wheat acreage. And if you'll notice, North Dakota again, a net loser on this whole deal on corn, soybeans, and wheat. So what do you think they're planting? I would argue that they're going to plant the heck out of sunflowers. They're going to plant a lot of canola. They're just going to plant all of these, oil seeds and durum wheat and things like that are really short, due to the Ukraine-Russia conflict. And North Dakota traditionally has been a very major sunflower producer. In fact, the only major sunflower producer really in the United States. So they're going to fill that gap left by the Ukraine crisis. So where that leaves us for supply and demand changes here, as you can see, so on the left here we've got the March WASDE figures for corn, and then we've got the acreage report figures here on the right. And as you can see, with that yield cut, and assuming the same demand and a trend line yield there this fall at 181 bushels to the acre, that cut brings us down to a 1.353 billion bushel carryout with a 9.07 stocks to use ratio. That's pretty tight considering we really haven't even pulled the planter through the majority of the Midwest yet. So, it's pretty tight, and I think traders, really express the fact that, we really don't have a strong supply of grains here in the U.S. and also just around the world. And it's there's still a lot of pretty much all of the growing season left to go, and the majority of the U.S. is of the U.S. corn growing region is in seeing dry conditions. On the soybean side of things, with those added acres there, you can see that we've got a dramatically different supply situation, between this next year, this 2022, 23 crop, and then this old crop marketing year. We've got a dramatically different situation with our stocks to use ratio up to 11.14% versus just 6.46% projected for the old crop. So, still need a trend line yield there. and it's still dry and obviously still early in the game. But overall, the supply of soybeans looks like it's going to be way higher than what a lot of people expected, and corn's still going to be tight. And that's just the overall theme going forward. Soybean market came off of this. I think they saw like 50 to 60 cents, off of where they were ahead of the report. The corn market, they rallied up to that 17 or that 770 region in the May contract, and that was previous resistance that we talked about in the newsletter. And they came off of that high pretty good. They came off of that high and closed off of that high just because I think the wheat market saw liquidation pressure towards the end of of the day. The new crop corn is still pretty strong though, and it's going to be the strongest with that acreage figure that came out, that 89.5, and I think you're going to see bulls use that just to have a bullish underpinning in this corn market. Although, just with the action of crude oil here lately and the action of the wheat market here going into the close, I think we could see a little bit of a sell-off for the corn market. But overall, this new crop December 2022 contract looks like it's probably going to lead the rally here. Just with that lower acre surprise. So going forward, the geopolitical issues remain. I think that's going to be number one in the markets going into the weekend and into early next week. I think the continued peace talks that fail between Ukraine and Russia, and just the continued fighting over there, and just the lack of exports over there. We've got anywhere between 1.3 to 1.4 billion bushels of corn exports out of Ukraine that are that were happened this last year. And could be threatened here this next year. And I don't know about their production out there. I mean, Russia's hitting a lot of the the fuel supply areas and a lot of their co-ops and things like that. I mean, it's just a lot of, I think it's $500 billion or more of damage to infrastructure in Ukraine from the Russians so far. So that's really going to threaten their production going forward here this year. And some would argue that they could be a net importer. So I think it's only going to keep our keep traders on edge about the supplies, especially on the grain side of things. Obviously we'll get more acreage adjustments in June. We'll see what the USDA has to say going forward, but I think overall they're going to use this as a bullish underpinning for corn and a little bit of a bearish underpinning for beans. I think crude oil going forward, into the weekend and then early next week is going to be the main driver of the commodity sector just as a whole. This morning we had the announcement that the U.S. was going to release, I think it's 180 million barrels of oil out of the reserves over the next few weeks. That sent the crude oil market down into a tailspin today. I think it was down like $6 a barrel, and we could see more losses definitely heading into the weekend. But I think overall, the U.S. only has so much supply in in their reserves, and I think it's just kind of a band-aid on a bullet hole type of thing. I just I don't see it having a long-lasting effect, and I think it's probably, dare I say it, a buying opportunity for the longer-term crude bulls. So overall, too, going forward, they're going to be focusing on the drought in the plains, and that drought is moving east and also moving south. I believe about 74 or 75% of the entire lower 48 is in some type of drought. And just the plain states, that North Dakota, South Dakota, Nebraska, Kansas, Oklahoma, Texas especially lately, is going to continue to be dry, and they're still going to be traders are still going to be on edge going into the spring. So that's all I've got for you guys today. Hope you enjoyed that, and we'll talk to you next time.